Welcome to Money Majlis. We have a very exciting episode lined up today with one of the most influential people in technology, a futurist and a best-selling author. I'm dying to discover his views on the disruption ahead for banking, finance and money. But before I go there, here is a short commercial break.
Money Majlis is proudly supported by Aqua Now, the premier crypto-as-a-service provider, now building in partnership with the top financial institutions in the Middle East. Discover more at aquanow.com.
Money Majlis is brought to you by E&, a global technology group.
Money Majlis is brought to you by Intellect Design Arena, driving digital transformation in banking and insurance.
Money Majlis is brought to you by Live Digital Bank, powered by Emirates NBD. Trust and innovation combined.
Money Majlis is brought to you by Network International, the leading digital payments technology company in the Middle East and Africa.
Today is a crisp, cool winter morning in Dubai, UAE, and I'm fortunate to be sitting with a world-renowned strategist who specializes in the future of business, technology, and finance. Chris Kinna is the author of more than 20 best-selling titles from Digital Bank to Digital Human and is famed for delivering powerful keynote speeches and moderating and chairing with lightning-rod insights. His experiences range from everything to do with banking, fintech, technology, and the future, with a specific focus on how cloud computing, mobile, artificial intelligence, cryptocurrencies, and related changes are shaping the future of our world. Chris chairs the Financial Services Club and the Nordic Future Innovation. He's the non-executive director of 11FS and is on the advisory boards of various firms including Meniga, Mode, Moven, and Yours. Chris has been an advisor to the United Nations, the White House, the World Bank, and the World Economic Forum, and is a visiting lecturer at Cambridge University as well as a TED speaker. He is an independent commentator on the financial markets and fintech through his blog, thefinancer.com, that is the FIANSER.com. Chris is not a showman. He is a no-man. Steeped in the industries of business, technology, and finance, he has the future of these industries in his DNA. Why? Well, years ago, someone told Chris to tell them something they don't know. This went to Chris's heart, as the only thing we don't know is the future. Having said that, he says he's not a futurist. He calls himself a commercial strategist and defines this as someone who looks to the future to see how to create a strategy for tomorrow. It's not all about money though with Chris. As a mature father, Chris also wants to create a secure future and one that is good for his kids. This is why he's also a successful children's author with the 5-book series about Captain Cake and the Candy Crew. And that is also why his challenge to you today is, how can we use technology and finance to make money and the world a better place? Chris, how are you doing and how is your holiday in Dubai going?
Yeah, hi Suvo. Thanks for having me on Money Madness. I know it's Majlis, but yeah, money is also mad. I'm loving Dubai. I come here every year for a winter holiday because we are based in Poland. My wife is Polish, and the 2 boys are 8 years old. And you know, the winter in Warsaw is a little bit cold, 0 or minus 30, depending on which day of the week. And walking the dog, I actually know exactly how cold it is. So we come here to get 2 or 3 weeks in the warmth. And as I said to you, I've been coming here for 20 years and I finally bit the bullet and started to invest and buying an apartment in Dubai.
Excellent decision, Chris, and I'm sure you won't regret it. And the best time to be in Dubai is now, actually, the best time of the year. So have a wonderful vacation here, but let me start getting into the podcast right away. Let me ask Chris, ask you about your latest book, which is called Intelligent Money, where you highlight how banking and finance are poised to make our money think for us instead of the other way around. Uh, Please explain this reversal of roles for our listeners, where the money thinks for us rather than we think for the money. Do you see the world of banking and finance today being at an important inflection point, much like when the mobile phone was invented?
Well, the theme of the book originally began with the friction between decentralized and centralized finance and the whole rise of cryptocurrencies, stable coins, and central bank digital currencies, CBDCs, which was interesting because I saw a survey the other day in New Zealand about CBDCs that was run by the government, and about 87% of the New Zealanders said we don't want one because we think you're just going to use it to track and trace us. And that's the whole point around decentralized currencies, that you can't be tracked and traced so easily if you're using something like Bitcoin or its equivalents. But then as it evolved, ChatGPT came out in the middle of writing the book. And so that moved into generative AI and what I talk about in the book around generative finance. And if you integrate generative finance with decentralized currencies and the network of the people, how that will operate and what does that mean? And there are lots of challenges and issues in the process. And the core point I always come back to, and I'm unlike some other people in my space, is that you will always need a bank because it's regulated, it's licensed, and you have the insurance that you won't lose your money, which you don't have with unregulated markets and platforms. But I think where we're moving, and this is since that book came out, and I'm working on my next one, but which I'll talk about later if you want. But I think it's really interesting, the whole partnership between Donald Trump and Elon Musk and where that's all going, and the crypto presidency of 2025 for the next 4 years, where America wants to become the Bitcoin mining nation of the world. How that will pan out is going to be fascinating, but we've seen what it's done to the explosion in the values of cryptocurrencies.
Yes, absolutely. Chris, fintechs continue to disrupt and lead the transformation of the sector, right, in a big way in the last, let's say, 20 years. Much like the rebellious millennial child compared to the more conservative and patient traditional parents, the banks, as you very eloquently point out in your talks. Now, fintechs contribute to only 5% today of overall global revenues, according to McKinsey, but are growing 3x as fast as traditional players, while their valuations are close to 40% of the total industry. Now, you say that it is not inconceivable that some of these large fintechs may well buy some large banks in the near future. Maybe not for their platforms, but for their customer base. Now, this interplay between banks and fintechs seems to be getting more and more interesting. How do you see this playing out over the years? Do you think some of the more traditional players need to be worried?
Well, it's fascinating because you and I have been watching it for the past 15 years, that there's over 30,000 fintech startups around the world, some of which are massive unicorns now, like the Revoluts and the new banks. In fact, there's probably about 400 fintech unicorns today. So with that valuation, they could afford to use their market capitalization to buy banks, and some have just to get the license, not so much the customers, but to get the ability to launch lending operations, for example, which has been a big struggle for Revolut in Britain, but they finally, in 2024, got their banking license. What is really interesting about this is that those valuations have fluctuated massively in the last 2 years. Stripe went from a $95 billion valuation in 2021 to $50 billion in 2023 to $70 billion today. And it's this market fluctuation and volatility that makes it interesting to see, maybe going back to that parent-child relationship. The traditional banks are the parents, the fintechs are the child, that the child needs to have stability. So that's another push for why fintechs would want to buy some banks, whether they buy a big bank like a Deutsche Bank or similar, because they're quite affordable in terms of their current valuations.
Correct.
I don't think so. And the reason being is that what does it really give them unless it's the leverage of not just the customer base, but the operations of those banks, because some of these banks have massive global transaction services operations, for example. That could be attractive for a Stripe. But would they really want to have that overhead and that technical debt legacy?
On the flip side, Chris, should banks buy fintechs? Should more banks buy more fintechs?
Well, I think most banks have moved to incubatory partnerships where they have horizon scanning around these startups, as I say, over 30,000, looking to see which ones are really interesting, which ones are doing innovative new things. Right now, I think an awful lot of OpenAI and API, open finance, open banking startups would be very interesting for banks to partner with, to work with. And so it moves from horizon scanning to selecting potential partnerships to working together to maybe eventually acquiring and internalizing. The challenge with that process is an awful lot of the time, going back to the parent-child relationship, it's not a equitable relationship. It's actually a dominatory relationship. And that's very difficult for both sides of the deal because the child doesn't want to be told what to do and the parent wants to ensure the child does what they tell them.
Correct. Yeah. Chris, you spoke earlier about the survey of CBDCs in New Zealand. Now, while the physical world continues to have borders, the digital world doesn't have any. Now, 10% of the world's population today own cryptocurrencies. In fact, the number in UAE, I don't know if you're aware, Chris, is 25%. It's one of the more evolved countries in terms of ownership of crypto. Now, we are seeing stable coins and central bank-sponsored CBDCs across many nations today. Now, while DeFi proponents want a more libertarian financial world with no big brother watching, like you said earlier, the TradFi players are worried about security, AML, and control, and rightly so, right? I mean, there's so many concerns about AML and controls. How do you see this whole hybrid financial system evolve? I know you call it HyFi, nice term. After Wi-Fi, we have now HyFi, hybrid finance. Who will govern this so as to provide more stability and security for this platform?
Well, it goes back to the point I was making before around we will always need regulated banks for trust.
Yeah.
And the theme I'm working on right now is digital trust. Who do you know to trust in the digital world and why? And I think it's very difficult. A lot of that comes down to digital identity. Because right now, identification, authentication, and verification are critical factors in this connected world, particularly as we're seeing far more deep fake scams and frauds that are going on, like the authorized push payment fraud that's gone particularly through the UK and other countries.
Yeah.
So how do you know that you're dealing with someone who can be trusted? And that's where I think the banks have their biggest USP, because as a regulated, authorized institution to store and deposit money and transact and lend, you have a feeling you can trust that institution. The problem that we have, going back to the libertarian world, is that those institutions are licensed by a national government. So how about creating institutions authorized and licensed by a global internet-connected world of people, which is what the libertarians want to create. And that's what DeFi, decentralized finance, is doing. And the hybrid finance piece comes in between the traditional institutions that are licensed by governments and the decentralized world that's licensed by the network of the people. How do you bring those together and how will they operate and work? And that's what makes the 2020s for me fascinating, because we've moved into this world where there are no borders in the internet. Time does not exist. Everything is 24/7. And you really have to start thinking different. which is why an awful lot of traditional banks are now actually starting to say digital assets, including cryptocurrencies, are part of a portfolio we can offer and provide custodial services for our clients. I got a stat the other day saying that 40% of high net worth individuals now have some form of crypto assets in their portfolio. It's just another form of investment asset.
You talked about 24/7 for crypto, for example, but yet you have a situation today where banks work, whatever, 9 to 5, stock markets work 9 to 5. Is that an asynchronous world we're living in today?
Well, it is fascinating, Sivo, because, I said I live in Poland and I use Wise as a fintech startup to do cross-border FX transfers.
Yep.
And quite often my wife will say to me on a Friday night, can you send me some money? But I know that she won't get it till Monday morning because the bank's not going to do
that is ridiculous,
the wire transfer. Wise can do the transfer, but the bank can't receive it and deposit it into her account until the Monday morning, which is really frustrating. I should get her to use something else, but she's very traditional. And it really comes down to, in a world where everyone expects everything now, then if you can't provide that, you look a bit stupid. What's been interesting for me is I've made the point for some years that my traditional banks in the UK, for example, don't provide me with alerts on my phone, whereas Monzo does. I use them actively, and then every time there's some activity in my account, I just get an auto alert, a push.
But
now,
most banks in the region here do that as well.
Well, I was going to say now, most banks in the UK do that. The banks in Poland do that, but it took them maybe 3 years to catch up. And this is where it gets interesting, because what's happening is I think an awful lot of the traditional banks are recognizing that if they don't move faster to keep up with the innovations that the customer can get from a fintech company, then they're going to lose. There was a really interesting survey again the other day, which was who did the fintechs bank with? I think it was a UK survey. HSBC was number 1, Revolut was number 2.
Really? Interesting.
75% HSBC and 72% Revolut.
But do you see 24/7 working for stock markets and banks happening very near in the future?
I think we're pretty much almost there already. When I was doing a lot of work, particularly in the capital markets space around proximity servers and flash trading, algorithmic trading, it got really interesting because although the markets have to stop at back then to do settlements and catch-up processes, I don't think we'll be like that in the near future, particularly with CBDCs, which will appeal to those markets in particular. And when you look at SWIFT during Cybos this year, for example, announcing a CBDC exchange platform using, I think to begin with, it's a limited number of currencies, but it will widen. There's no reason why you couldn't do 24/7 settlement in real time. And that's where we have to move to keep up with the demands of corporate clients and institutional investors.
Correct. Chris, let's move to AI for a bit now. The development of Gen AI, a lot of people consider as being the same as a steam engine or electricity in terms of impact. And a McKinsey survey says it's going to add $4 trillion of value annually to the global GDP, including $200 to $340 billion annually for the banking sector alone. Now that's huge. When do you see generative finance taking off and becoming real for customers and the industry? A number of banks are doing a number of use cases at the moment, but customers aren't really seeing the impact of it yet. To your mind, what are the key use cases that will provide the most impact?
That's a tough question because it's a little bit like talking about big data and cloud computing. It's a massive area that you have to get to the nuance of the specifics of the 1,000 or million use cases that lie underneath those areas rather than at the highest level. And AI is not new. I mean, I was doing paired trading, neural networking in the 1990s. Now, I mentioned algorithmic and flash trading. And those sorts of services have been around for a decade. I talk a lot about JP Morgan. I still have a sort of front page from 2017, which was from CNN, I think, saying that in 1 second their AI engine can process contracts that took 360,000 hours of lawyers' time before. And then we've also got quantum computing coming, which will make that even faster.
Correct.
So where we are right now, most of the AI use cases that I'm seeing are for customer intelligence service and marketing. Obviously fraud and fraud management and risk management, AML.
Yep.
And there are specific companies in all of those areas which are being launched. I've got a chart of fintech AI startups that's growing every day. And these seem to be the lead areas, risk management, compliance, etc., which are the specific nuances under AI. But the one thing I also say is that if I know who you are, where you are, what you're doing and what you want, which is what AI can work out, then how does that help my client? And bear in mind, that's not just the retail customer, but the corporate and institutional customers. You know, if I know where you are, what you're doing, and what you need, how can I use the technology to automate that and give it to you without you having to think about it, which is why I had this headline, Intelligent Money, when money thinks for you. So you don't have to think about your money. The bank's automated and giving you intelligence so it thinks for you. And you only get the alerts, going back to my Monzo and other examples, when you need to know something. You know, just for day-to-day trading, why would you need to know that things are happening? You should only know when there's something as an exception event.
Chris, I was at the Singapore FinTech Festival a few weeks back, and I was telling you that most companies exhibiting there had a .ai at the end of their names. Now, it made me wonder whether we're going through a big hype cycle at the moment, and whether it's a solution in search of a problem, as opposed to a problem that's being solved by a specific solution. I don't know what your views are on this. Everybody's turning into a .ai company today. Is that the right thing to do?
No. I mean, you and I have been around long enough to have seen cloud computing being hyped, then it became big data being hyped.
Then blockchain being hyped.
And then it became blockchain, and then it became AI, and next it will be quantum. But in each and every part of these hype cycles, there are very specific use cases that will make a difference. I remember having a meeting with a massive European bank, and the CIO said to me, and at that time, blockchain and AI were both rising rapidly in the headlines. He said, we're watching blockchain, but we're investing in AI.
Okay.
And I said, why is that? He said, because blockchain probably will give benefit to the industry, but it's not going to give benefit to my company right now. So we'll take part in all the industry initiatives. And this is a key thing about blockchain, that most of the benefit will come from industry initiatives.
Correct.
Rather than specific internal use
the whole
cases.
chain to work together.
There's a whole chain, and that's going to take a long time to come together. It will happen, but I wrote in 2015 that it's probably going to take 10 years. I was being optimistic. We're still working on it. But AI can give very specific bang for the buck, going back to my JP Morgan example. And in fact, I saw one just the other day that they used AI, some scientists, to give a visualization of a fruit fly's brain that would have taken 4,000 years to work out if you didn't have AI in the systems that we have today.
Incredible. And I saw a European company using a board director as an AI director, and could analyze the board minutes as well as board matters as well as any normal director would do.
We're lucky we're our age, because the chief digital officer is being replaced by AI.
Correct. I'll come to that chief digital officer discussion in a minute, because that's an interesting one to have. But let me turn to your blog, Chris. You have this blog called The Financer, which you've been writing for the last 20 years. Amazing feat. You recently had a very interesting series of posts there about the jobs of the future, including interesting ones like air traffic controller to guide flying taxis, drones and the like, multiplanetary agent to support on travel to Mars and the moon, Elon Musk would love you, DNA designer, environmental defender, and so on. Interesting. What do you see, Chris, are the jobs of tomorrow in the banking industry in the near and long term?
I mean, I've got a trite phrase which I use, which is the future jobs will be all about training, explaining, and sustaining, or maintaining, if you prefer. Because AI just regurgitates. It knows nothing. Garbage in, garbage out. So you have to make sure the quality of what goes in is a good quality as what comes out. And I know this because I've gone to several AI engines and said, write a blog in the style of Chris Skinner. And they're very good, but they've just taken an awful lot of the patterns of my blogging for the last 20 years and put it together into something, which if I give them the subject, write a blog about the future of banking in the style of Chris Skinner. It's fine, but it's not written by me. It's regurgitated from me. So the first thing is you've got to have the content. And without that, there is no AI. The second thing is you then have to train the engine to behave in the right way. And you might remember when Microsoft launched a Twitter account that was AI driven, it became a misogynistic racist within 24 hours. So you have to manage the machine and train it to behave properly. And then you have to explain what the machine's doing, because there's a lot of people, particularly humans, who want to understand how to use these engines and how they work, and can you explain to me how I can get involved and learn to be part of that network. And then you have to maintain, in terms of technical debt builds up very quickly. It amazed me that Stripe, who's only a 15-year-old company, said that a third of their operations, in fact probably more today, are dedicated to dealing with their legacy code and technical debt. In banks, it's about 65%.
Yeah.
I still find it amazing statistic of the US that 43% of their core operations are running on mainframe COBOL systems, even now. And there's nothing wrong with mainframe or COBOL. So just to be clear, it sounds like that's legacy, and it is. But the problem is finding the talent and the resources to maintain those machines. And that's why I say it's going to be a core operation in AI to have trainers, explainers, maintainers.
But do you think the traditional roles in banking, like a branch manager, relationship manager, risk officers, compliance officers, will remain?
Yeah, but probably a lot less. And that we're not going to have so much physical outlet operations. So when you say branch manager, what's a branch for? And this is a core point I've made since the first time I met you, which is, that the bank of the future will be based on the distribution of data through software and servers, rather than the physical distribution of paper through buildings with humans. That doesn't mean we don't need physical distribution with buildings and humans, except that the reason they will exist is on top of the digital distribution of data and software and servers. So you then ask, when do you need those people and why? And the answer, I came up with it years ago, and I think it's finally becoming reality, is that about 80% of the physical distribution operations that we had in the start of this century will disappear. And the 20% that remain will be marketing services for trust, going back to who do I trust in the digital world. So I want to go somewhere where I can say, show me the money and I can look you in the white of your eyes and trust you. And that's going to be very important. There is more in that some people say, we'll need branches for advice. Really? I can get advice from an AI engine. I can get advice from an AI engine that's given to me through an avatar that looks like Scarlett Johansson, or George Clooney, or whatever.
Correct.
So why would I need to physically go somewhere? And in fact, I think these days people resent the idea of physically having to go somewhere, whether it's to work in an office or visit a branch to do identification and verification. And then talking of your risk and compliance and other functions, that goes back to my training, explaining and maintaining. The machines don't have the experience that we have. And if you let the machines run wild without limits, then you end up in the global financial crash of 2008. And in fact, I hate calling it global because it's actually America and Europe. It wasn't global. But going back to 1998, there was an Asian financial crisis, which I'm sure you remember.
Of course.
And those crises come around on a regular basis if you let the machines run wild. So you have to have controls.
In a recent podcast I had, Chris, with Piyush Gupta, your good friend from DBS Bank, CEO of DBS Bank, said that technology should no longer be a back office function for banks, should be a front office function for banks. You agree with that?
Absolutely. I think technology is the core of the bank. Going back to the core is digital distribution of data through software and servers. And then you think about what can you add on top of that, which is the human relationships that are needed and where are they needed and why. And I'm reminded of, again, decades ago, one of the guys I work with said, if you don't have a digital person on the board and on the executive leadership team of the bank, then you will fail. And yet, even today, I go into an awful lot of boardrooms, an awful lot of executive leadership meetings, and they have no one there who's actually qualified in technology or telecommunications. And when I was writing Doing Digital, which was 2 books ago, I interviewed what I felt were the banks that were trying their hardest to be leaders, including DBS with Piyush, who I think is probably on the leading edge of digital transformation in finance.
Absolutely.
But I also interviewed BBVA, and I just remember I walked into their executive leadership team, and they had a chief data officer, which not everyone has these days, but on the leadership team, not reporting to the CFO. Obviously, they had a chief financial officer. They had a head of engineering on the leadership team. They had a head of customer experience on the leadership team. They had a chairman and a chief executive who come from telco and technology backgrounds. So half the leadership team were digital, as far as I was concerned. And that to me is how you qualify to be a digital bank. Because if you have compliance, risk, accounting and financial people on the board and no digital people, you're just a bank.
Correct.
If you have digital people in some balance with people with banking backgrounds, you're a digital bank.
But tell me, is it a problem then sometimes of the age of the board members? I mean, most board members, I was reading a survey recently, 65 or 70% of board members globally are about 50 years of age. Now, by definition, they're not digital natives, right? They're digital immigrants at best. Is the problem today of most companies being run by oldies who don't really understand technology?
I thought you were going to say something then that 65, 70 years of age was about right, but you said percent are 50 years.
Yeah.
I must admit, most boardrooms I walk into, I make that point, which is that an awful lot of grey-haired people and not enough diversity. And diversity doesn't just apply to
Gender.
Gender.
It should also be age.
Yeah, age. And I equally make the point that a huge number of the unicorns in the fintech space have grown out of people who are Gen Z. And some people think I'm going to say millennials, but millennials are now the guys and girls who are running the boards of banks.
Correct.
This Gen Z and Gen A, the next generation, who are creating the vision. One of my favorite stories was a 9-year-old girl in Thailand created a cryptocurrency company. And she was the CEO at 9 years of age. Admittedly, her mother knew crypto really well, so maybe a little bit jazzed up. But it's true, when you look at Vitalik Buterin, who created Ethereum, 19 years old, when the code was complete. Stripe, Patrick and John Collison were 19 and 21 years old when they launched the company in 2010. And now they're, billionaire boys. Lucky them. And this is the key. So what I look for when I walk into a bank's executive team, I want to see some people who are not wrinkled. But equally, when I walk into a fintech's executive team, I want to see someone who is wrinkled, because you need that experience.
Interesting.
That's been around the block to make sure when times are hard, you survive. Right now, I said that there's been sort of downturn in fintech investment, and it's very interesting that when you look at those that are struggling, it's the ones that have never seen a crisis before. The good times for the last decade have gone. And if you've never been through a crisis, how do you handle one?
Talking of board roles, Chris, I mean, you said in some of your writings that you disagree with the chief digital officer position. The whole concept of CDO, chief digital officer, is untenable according to you because Not for anything else, but it seems to indicate that digitization is a problem of just one person or just one team. Interestingly, fintechs don't have a role of chief digital officer. It's banks that have created this role. How do you recommend then banks lead and drive digitalization internally?
Well, I think what I was getting at there, and it applies equally to chief data officer, is delegation of digital transformation is not tenable. So I go into an awful lot of traditional banks, and they may have commercial investment, retail banking, for example, and in each one, they will assign somebody to the executive team, probably reporting to the chief financial officer, to be the head of data or the head of digital. And as soon as I see or hear that there's a CDO within a line of business that's trying to do change, I know it's not going to work. And the reason being is that digital transformation is not about a project with a budget. It's about changing the whole mindset and culture of the whole organization. And so going back to Piyush, I mean, I know you interviewed him, but I interviewed probably about 25 or maybe more execs in his company, some who directly reported to him, some who were in specific roles. And all of them were talking mainly about the customer journey and joyful banking. Very few were talking about things that you would expect them to. I had an interview with the chief financial officer, and it was only about 30 minutes into the conversation I said, you haven't mentioned stakeholder returns or return on investment or profit or anything like that in this conversation. You talked mainly about investment in customer and people. And she said to me, well, that's the focus. That's where we should be. If you're going to be a digital bank, it's about the mindset and the culture of the company across the whole company. And that was consistent in his whole executive team. Whereas an awful lot of people do focus too much on
IRR.
Yeah.
Now, Chris, you work with multiple bank leaders like Piyush Gupta in helping them, transform their journeys, look at digitization across end to end. What are some of the lessons that you would like to share with my listeners? What are banks getting wrong?
I think again, it's understanding it's digital transformation is not about a technology or a function or a project or a budget. It's about a cultural mindset shift. And you can see this in an awful lot of banks, but I'll take JP Morgan Chase because Jamie Dimon has been leading JP Morgan Chase for 20 years. Before that, Bank One, and before that, Citibank with Sandy Weil. And I find it fascinating that Jamie Dimon is a huge digital technologist fan. That's why JP Morgan Chase is very successful. It's one of the reasons. And it's the reason why they're investing $16 billion in 2024 in technological operations, which is a huge amount of money. Although as a percentage of revenue, probably about right. And when you look at what they're investing in, about half of that is going into innovatory developments, including competing with Meta and Alphabet in Silicon Valley, for example. They have a big campus on West Coast America, including obviously AI, quantum, and all the other things we've discussed. And then the other half is going into keeping the lights on, the technical debt, maintaining the machines. And I think what banks get wrong is they think most of it is about maintaining the machines rather than being leading edge.
So run the bank versus change the bank, the kind of investment they make.
And also there is this run the bank and change the bank thing, which is, again, in interviewing most of the banks that are successfully getting into digital transformation, the leadership team is split quite nicely between the CFO and their team who have to deliver the results and the CEO and their team who have to deliver change. And you can't have the two together. I mean, equally, one of the big arguments that I always put forward to traditional banks, because I think they get it wrong, is why would you launch a separate digital bank? that ends up competing with your own bank, and you haven't worked out the rewards, remuneration and bonus structures, and so you end up with the heads of the lines of business being at each other's throats because the digital bank is taking customers from the traditional bank.
Correct.
And the incentives aren't there, and structures aren't there to allow that to happen in a structured fashion. What you have to do is not leave the old bank to wither on the vine. You have to make sure the old bank is changed, change the bank, whilst you run the bank.
Understood. Do you think the new banks coming out of traditional banks, like a number of big traditional banks have launched their own versions, will succeed against the new banks that are starting from scratch?
That's a difficult question. And the reason it's difficult is that I think an awful lot of the new banks and neobanks, challenger banks, are doing very well at what I call lifestyle finance, transactional banking, day-to-day payments and things that you want to do as you live your life. They don't get really the core of the more complex things like the mortgages, loans, FX.
Wealth management.
They can mature into those, so it's not to say they won't get there. But right now, I always remember in Rwanda, I was at a conference there, and the driver that I was with was paying for everything using his phone. Contactless payments, perfect. I said, well, do you have a bank account? And he said, yeah, I've had a bank account for years. I said, well, what do you use your bank for? He said, I use them for the complex things. And for day-to-day lifestyle, I just use the app. And I think that's the split between neobanks and traditional banks. The simple things for neobanks, complex things, traditional banks. Having said that, when you look at New Bank that's come out of Brazil and is now across South America, and in fact they just announced that they're coming into Africa and Asia.
Correct.
In a partnership with Time Bank. What's interesting about them is they've created a massive bank with over 100 million customers in South America.
Right.
Out of almost nothing. And how did they do it? Well, they started in 2015, and I was in Sao Paulo in Brazil in 2014, and all the banks acted kind of like a mafiosa. It's like collaborating with the government as a cartel, so no one could get into banking in Brazil. And suddenly new banks created this massive bank in Brazil. And what they did is they didn't target banking. They targeted credit card fees. And that's how they started. Because they said that if the banks were the empire, then Darth Vader was the credit cards, and that's because the credit card costs in Brazil were really high, just to have an account, the interest on the account, etc. And that's where they started. And when the government saw how quickly they could provide financial inclusion as a result of that, and also competition, then they gave them a banking license. And that's how they've grown so quickly, because they are far more competitive on rates and they can provide an account to anybody, no matter how rich or poor.
But what New Bank has done in Brazil, Chris, arguably Monzo hasn't been able to do, or Revolut hasn't been able to do in UK or Europe, right? Why do you think that's the case?
Well, Monzo and the Revolut haven't focused as much on financial inclusion. They focused on competing with a regular retail bank account or cards and payments. Revolut's done a very good job of growing to 50 million plus customers over the last 10 years.
Yeah.
And the reason for that is the functionality and ease of the account and the low cost. But they're not focusing on financial inclusion. And Monzo started as a prepaid card, converted into a full bank licensed account. But again, not really focusing on financial inclusivity. They're focusing on competing with the traditional high street banks. Whereas New Bank didn't focus on that. They focused on financial inclusion and low fees, low rates, and ease of use in the same way as Revolut and Monzo, but with a much wider brief.
This is a good time to take a commercial break for a message from our sponsors. You do remember that our sponsors fund not just the production of this podcast, but also the $50 gift cards that you can get by simply visiting give.moneymajlis.com where you can redeem these cards for one of the pre-selected causes from across the world. Later in the show, I will tell you which cause that our guest today has chosen to redeem their US dollar 1,000 gift card. But do remember to log in at the end of the episode to give.moneymajlis.com.
The financial world is changing fast. Institutions need to meet the growing client demand for crypto financial services, but they need a battle-tested platform to build upon.
AquaNow is a leading crypto financial services platform, powering incumbent institutions to launch crypto brokerage, payments, and remittance services for their clients, securely and at scale.
Be part of the transformation. Visit aquanow.com today.
The end touches your life.
in more ways than you can imagine.
You want more tech,
More speed.
More convenience,
more entertainment.
more business solutions,
EAN gives you all that.
and so much more.
EAN. Go for more.
Parents teach their children to talk, to walk, to ride, to read. So why not teach them about managing their money? Introducing the all-new Live Light app, designed to teach 8 to 18-year-olds good money habits. A free and totally secure app designed for them that's always under your control. Top up their cards, set limits, assign tasks, and reward them with allowances. Download the LiveX app to open a Live Light account in minutes, and the first 50 dirham allowance is on us. Visit live.me today. Live Digital Bank by Emirates NBD. Trust and innovation combined. T's and C's apply.
Money Majlis is brought to you by Intellect Design Arena. Intellect drives digital adoption in banking and insurance. Leverage emac.ai, the most comprehensive, composable, and intelligent open finance platform for banking and insurance transformation. Intellect Design Arena.
The end touches your life.
in more ways than you can imagine.
You want more tech,
More speed.
More convenience,
more entertainment.
more business solutions,
EAN gives you all that.
and so much more.
EAN. Go for more.
Money Majlis is brought to you by Network International, the Middle East, and Africa's digital payments champion. We make business happen and economies prosper by simplifying commerce and payments. Trusted by over 250 banks, fintechs and telcos, and 130,000 merchants in over 50 countries. Bringing you tomorrow's payment solutions today.
The question I have for you, and I had the same question for Brett King as well in an earlier episode, is
Who's he?
well, you're a very good friend now, mutual good friend, is, we are seeing the neobanks like the Revoluts and Monzos and, in regionally Live and Vio, etc. Very good second and third banks, right? The point you made. Your complex stuff stays with the big traditional banks. If that is the case, the revenue will not really shift to the new banks, right? They'll nibble at the edges, yes. They'll do payments, they'll do credit cards, they'll do a few things. But the bulk of revenues, especially the corporate banking revenues, wholesale bank revenues, will stay with the traditional banks. Now, does that mean we won't really see a shift of the market shares of revenues for the next 20, 30, 40 years? And the new banks will just be, like peripheral banks. I don't know what your view on this is.
Well, there's a lot of interesting things happening. And you have to look at the use case at the micro level rather than the macro level. And going back to, as I said regularly during this chat, big data, cloud, AI, that's the macro. What's the micro? And an awful lot of the corporate and institutional and investment markets have been not untouched, but largely untouched by the fintech revolution, because an awful lot of the fintech revolution is coming from visionary teenagers in Gen Z who understand they don't like the bank account services they get today, so they focus on trying to replace them and innovate around that space. Having said that, you've got eToro, for example, who I've known for a long time, that did a very good investment trading platform.
Correct.
And I met a company the other day called Loop FX, who are focused on FX global trading as a platform and using automated AI in that space to give a far better service, created by a former leading FX trader with one of the big institutional bank providers as a brand new FX company in fintech. And I think what's going to happen, and I am seeing this more and more, is that the people who have been trained by the banks to do a job, whether it be corporate, institutional or investment, get frustrated with the bank's inability to innovate around those spaces and the low pace of change.
Yeah.
So they leave the company, get investment from private equity or angels, start a new company using technology and in the vision and innovation that they have. And this is what LoopFX is all about, because the guy who has created it came from being an expert in FX. And one of the points he made is there's $7 trillion of FX trading every day around the world, run by about 1,000 people.
Wow.
So if you can get to those 1,000 people and say, look at our platform, then they could be trading $2 trillion of that using automated AI in a far more efficient fashion. And that will make them a gorilla in the room rather than a minnow.
No, interesting. Let's move to cash now, Chris.
You still use it?
You started your career managing the strategy for cash machines, right? For a leading self-service solutions provider, NCR. You also happen to be an avid collector of banknotes across the world. I'd like to see that one day. And banknotes are closely linked to cultures. They present, important symbols and faces from across the world. But you and I know that the world is becoming more and more cashless. At last count, I read only 16% of POS transactions globally are now being done using cash. In fact, less than 10% in some of the Western markets. The rest are through payment cards and mobile wallets. Crypto-based payments are again rising. However, Chris, despite all of this, there are 1.4 billion unbanked adults in the world today, and a rising number of senior citizens who all look at cash as a key tender of value, a store of value and a tender of value. It also provides anonymity, like you said earlier, in terms of storage, in terms of transfers and usage. My question to you, therefore, is will cash still be king in the foreseeable future, or are we seeing a long goodbye of cash?
I think we've been seeing a long goodbye of cash and bank branches for 20, 30 years. And it's accelerating. During the pandemic, an awful lot of people didn't want to use cash because of the fact that cash can transfer diseases. Having said that, it's interesting because cash is now back on the rise again in many countries because of the squeeze on credit and salaries, and the cost of the rise of living means that people can budget better with cash. I always remember a story of a company that was designing products and services for one of the big American banks, and in doing so they went and interviewed a number of consumers in their homes, and one they found had put their cards in the freezer compartment of their refrigerator.
Really?
To stop them using them unless they really had to. They prefer to use cash because it's easier to budget with cash. I think the challenge we have is if we can create digital cash, which we can today using crypto, do we need to have physical cash? And in some ways, it's a little bit like when we talk about AI. AI is physical AI and digital AI. Physical AI is the robotics. Digital AI is the algorithms. And there is always a use for a physical service. And the critical thing about cash is there is no digital replacement today that I think is good enough and easy enough to use, that's anonymous, real-time, trusted, and immediate. It needs something better, and I haven't seen what that is yet. Some would say CBDCs, but then going back to what we were saying earlier, do I trust using a government-issued digital currency and that they won't be tracking and tracing me because with cash it's anonymous?
So you think cash will continue for some more time?
I would give it another 25 years.
Okay, interesting.
Do you remember what happened in the UK with checks?
Remind me.
Maybe not, because I'm British and you've been living in Singapore and Dubai and elsewhere.
Yeah.
So in 2012, the government announced with the payments regulator that they were going to abolish check usage by 2018. And it ended up huge numbers of pressure groups non-governmental organisations, loading pressure on the government to reverse that decision. And they did. And so we still can use cheques in the UK, which I think is ridiculous because who wants to write a cheque? But the main reason was how do you pay the gardener and the Boy Scouts clubs and the library or whatever it may be if you haven't got a suitable digital alternative? And that was the point that was made, that a paper cheque is easy, whereas what's the digital alternative? I think today they could make that announcement, but they've never tried again because they just went, okay, we give up, we'll go back and you can still use cheques.
And QR codes haven't really taken off in the UK, right?
Not so much. I mean, I'm living in Poland, and you know, in UK, well, I live in UK and Poland. The issue with QR codes that the UK is highlighted, in particular the UK, is that quite often they're fraudulent. So by way of example, you go and park, and as you go and pay for your parking at the QR code meter, someone's put a sticker on it
top.
That's their QR code, and they get the money, and the parking company doesn't get the money. So QR codes aren't secure. Having said that, they are much more in use everywhere. In terms of just in my hotel here in Dubai, you know, if I want to look at the restaurant menu, it's on a QR code.
Yeah. Or if you go to India or China, I mean, even vendors on the street side will.
Well, I was in India a couple of years ago, and I just always remember going to a tour, and when I got to the temple, as you walked into the temple, you can give donations in cash or use Paytm's QR code.
Correct. No, that's interesting. Let's move a little bit to the kinds of technologies we are seeing. You're a big commentator on technology, Chris. We've seen the mobile and cloud cycles having played out, and the benefits are visible to all of us. We today have AI, we have quantum computing, we have immersive reality, and we have a number of other technologies that are, you know, at different stages of the hype cycles. But, you know, as I say, more things change, more they remain the same. As a banker today, you're being hit with so much of news about the latest technology that's coming at you that will transform or possibly transform how we do business. How is a banker supposed to make sense of all this? What do you think is going to be the fundamental technological change that we'll see in banking in the coming decade that we should really learn about or worry about?
I think you should learn about and worry about all technological change. But I don't. And the reason I don't is that for the whole of my life, people have said technology is going to replace banks and banks will be destroyed and we don't need banking. Bill Gates, 1996, we need banking, but we don't need banks, was his quote. And completely wrong. You know, and that's, since he said that in 1996, how many banks have been destroyed by technology or replaced by technology? I'd find it difficult to think of one. I can think that, as we said earlier about fintechs augmenting and improving banking and reaching parts of the world that have never been reached before, but has it actually replaced a bank, a traditional bank? It might. I'm not saying it won't. But when I look at where we're going next, what I'd say is banks need to monitor all technological change and work out when it's right for them to move and whether they want to be a first mover or just keep up with the pack. And equally look at the whole ecosystem of open banking and open finance, the fintech community and the platforms that go around that, and what the Metas and Amazons and Alphabets are doing out there, as well as the Alibabas and Tencents and Paytms. And as long as you're keeping up with it all, because you have a good research team and a good monitoring team doing horizon scanning, the only thing you need to worry about is whether you've got the right talent to enable you to innovate and keep up. But going back to Bill Gates's quote, and I say this in all my presentations, I don't see banks being destroyed by technology. I see them being lifted by technology. And the reason for that is that I was a big fan of Second Life in the 2000s, which was this, if you don't like your real life, get another one.
Correct.
So I had my avatar. I spent a lot of time in this alternative world. And that was the precursor to what we now talk about as Web3 and the metaverse, and where we're going next.
Yeah.
But there was an incident in Second Life where Ginkgo Bank, which was the most popular bank at that time, disappeared just like that. And no one knew why. And it transpired afterwards it was because it was being run by a student who used the real money that was in the virtual bank to go and buy a Ferrari and a condominium. And he definitely did live another life in the real world. And at the time, all the virtual people went to the virtual headquarters of the virtual world and demonstrated for 3 months saying, give us our money back. And eventually the company, Linden Labs, who run Second Life, said, look, it's not our problem. Until after 3 months, they said, okay, we recognize it is a problem. So our solution is, if you're going to be a bank in the virtual world, you must be a bank in the real world with a license, regulated, trusted. And that's where it comes back to who do you trust in the digital world and why? And I'd say it's because, you can get your money back. Show me the money.
Correct. So that then becomes a big factor in the success of a digital bank, right? How do you establish a brand that consumers will trust to put their life savings on, especially if you're, if you're doing wealth management, if you're doing deposits, if you're lending money, I guess people care less. But if you're going out and saying, give us your money, then as a consumer, you want to know that you exist really and that you will get my money back at some point, correct?
Well, that's where I come from. And it just doesn't mean that you have to be able to go into a bank branch. It just means that I want to know that if I deposit, then it won't be lost. So a good example is there's a couple of startups in Europe that I'm dealing with, and when I go into their apps, the first thing I see is backed by the financial compensation scheme. So you can deposit 85,000 or 100,000 euros, 85,000 pounds, 100,000 euros, and we're licensed and won't lose it. And that's the upfront guarantee that you see before you go any further, because that is a critical point.
Yeah. Have you seen a lot of consumers losing their money, the hard-earned savings, with new banks coming up and vanishing? Has that happened in the last? Loads?
Yeah. I mean, the best example is in China, where peer-to-peer lending became a huge marketplace during the early 2010s. And I went to a conference there in 2017, and it was just after the government had brought in laws around peer-to-peer lending and said that to be a peer-to-peer lender, you have to have this level of capital. And about 5 peer-to-peer lenders were going out of business every single day. Because at that time there was about 5,000.
Yep.
And now there's maybe a few hundred. But for everyone that disappeared, people lost their money. And we've seen this in UK, Europe, America. I mean, look at FTX with Sam Bankman-Fried. I'd call him Sam Bankman-Fried because he's lost so much money for people. We had one in the UK, London Capital Management, I think it's called, that just was a Ponzi scheme, but looked very trustworthy, even though in that case it's a failure of the regulator because they had license, but they weren't being monitored properly.
Okay, shifting gear, Chris, you wrote the book Digital for Good a couple of years back. I was going through it just yesterday, and I just love the theme of the book, which is if you don't stand for something, you will fail. And that purpose is integral to the success of your enterprise. That's not for banks, it's for all enterprise, but you write specifically about banks. How do you see this sense of purpose being adopted by the financial industry? And what specific initiatives do you see banks taking in this regard?
Well, most banks are trying to associate themselves with being environmentally friendly, investing in renewable and sustainable services, and being green. And yet the majority of them are greenwashing. In the top 4 US banks, along with HSBC and Barclays, are fracking the planet, which I say very carefully. And they haven't turned around yet. One of the contributors to Digital for Good was Gail, who was a co-founder of Extinction Rebellion, which are an activist group that target specifically to annoy everybody in the same way that the suffragettes did to get women to vote 100 years ago, which is how they compare themselves.
Yep.
So they go around spraying red paint over Barclays Bank branches to make the point that they're not friendly. They go into HSBC's headquarters in Canary Wharf and break the windows. And normally, not every time, but most of the time, when it gets to court to say you've been doing these actions which are not legal, they get let off by the judge on the basis of the comparison to this is to make a point. And I think the point is that you can use technology to make the world a better place.
Yep.
And I've seen this in quite a few companies. And probably my two favorites was when I went into Alipay in Hangzhou, China, and they had a poster which said, use technology to make the world better. And I just thought, and it was in English, but I just thought that's really interesting. That's one of the first things that I've seen when I walk in here. Another line they had in their presentations is making your digital lifestyle better. So making life better. And they have Ant Forest, which is an amazing project actually created by a small group of people within the company that for every payment you make, if it's a environmentally friendly payment, as in reusable, or if you avoid using your motor vehicle and take a bus, then you get credits. And when you get enough credits, they plant a tree, and they've planted, it's probably by now 1 billion trees, because last time I looked, it's about 500 million. And that was a few years ago. And it's reducing the pollution, greenhouse gas emissions in China, even though there's still quite a large amount. It's come down by about 3% through tree planting over the past 8 years, thanks to Ant Forest. The other one that I liked is the bank in Finland that I met. I think it was Arlandsbanken, but they have this Baltic credit card, and every time you make a payment that's environmentally friendly, they invest in making the Baltic Sea more sustainable. And they've sold that solution, which is based on simple algorithms, to a number of other banks around the world. So it's now used by over 100 million people for renewables and sustainability. And I think renewable sustainability environment is critical, particularly with Gen Z and Gen A, obviously. But
so your point is that every bank should find a purpose apart from just adding to shareholder returns, right? It's not just returns and profit that you're going for, but something bigger than that. Is your point?
Yeah, and quite often if I walk into any institution and the fintechs quite clearly, if I say what do you stand for, have an agenda that they can articulate, and it's pretty consistent across most of the people. And it's not mission and vision and those things. It's what do you stand for? What's your purpose? Whereas if I walk into large traditional institutions, they've lost it. They had purpose when they were created. Some of these going back to the 1700s, or even before. But what do you stand for today? And I'll get here's our ethics and the things that we focus on, integrity, reputation, trust. And then I go, yeah, but what do you really stand for? Because all the banks I talk to stand for those things. And there's not many that can articulate their purpose well.
Very interesting. Very interesting. Chris, you've been a regular visitor to Dubai over the years and the UAE. You chaired panels here, you attend conferences here, you advise banks in the region. The banking industry here has been going through a lot of changes, a very rapid change. In fact, probably, arguably, faster than many other parts of the world. We are seeing, a significant rise of fintechs, the crypto industry. Many of the companies have actually moved home to the UAE. What is your view of the financial landscape here, and how do you compare its development with similar markets globally?
Well, what's been interesting here is, one of the earliest experiences I had here was going back to 2003, and where I presented and chaired at a conference. And I've been coming regularly ever since. I did some work with the DIFC back in 2007. And I think Dubai was a big first mover in the region to gain a leadership status, and has achieved that. Because when I talk around the world, around where I see the main centres of the fintech hubs, it's Singapore, London, Dubai. It's interesting. I just went to Riyadh this year and was amazed at how quickly that's changing.
Absolutely.
Because I think the last time I was there was about 2017, and I didn't see much happening. Whereas now I see a huge startup
it's
community.
a sea of change in Saudi Arabia.
Billions of dollars being invested.
Yeah.
And you kind of wonder what the future will look like in 10 years between Saudi and UAE.
Yeah, interesting.
There's a balance there. But equally, I was in Egypt this year, and I've got friends there. There's quite an interesting Egyptian fintech community. And what I said to them as I was there is that if you could link up with Nairobi, Lagos, and Cape Town, you could create this African circle of fintech innovation hubs. And in the same way, I think that they could include Dubai and Riyadh as part of that, because then you'll have a MENA, Middle East, North African, or Middle East African group, which those relationships I think will be becoming more and more important.
Absolutely. And the growth rates for MENA, for many of the businesses here, are far higher than the rest of the world. I was talking to the MasterCard head for the region yesterday, and he was saying that the MasterCard growth for Middle East Africa is 2x the growth for MasterCard globally, which is amazing. Now, Chris, it's time now for some rapid fire questions. You are a futurist, well, though you say you're not one, but the whole world thinks you are one. So I'm going to project us to 2050, and I'll make a statement about 2050, which you'll have to say will be true or false as of 2050, and maybe add a sentence or two about why you think that's the case. So every question has an answer either true or false. It cannot be maybe. And then you've got to take a stand as a futurist, and then give us a bit of an explanation for us less intelligent people of why that is the case. Okay. I'll start. Cryptocurrencies have become mainstay of the financial system in 2050. True or false?
True. They already are.
A mainstay of the financial system?
For many, in that if 40% of high net worth individuals have crypto as part of their digital asset portfolio, if MicroStrategy, as an example, as a corporate, are putting an awful lot of their treasury reserves in crypto, if countries like El Salvador switch to crypto, and if JP Morgan Chase, where Jamie Dimon has spent most of the last decade saying crypto is a scam, now offer crypto services on their trading desks and for their institutional investors and corporates. Isn't it already a mainstay?
Interesting. Bank branches have been converted to museums. True or false?
True. Most of them have become wine bars or restaurants. And it makes me laugh in that just the other day, you may have seen it on the news, Italy announced that the Trevi Fountain was reopening, but to go, you now have to get a ticket because they want to avoid too many tourists destroying the fountain. The same is true in Venice. And so what's happening is an awful lot of Europe is becoming a museum for the world. I've been writing about regulation strangulation, so I think Europe's far too regulated. But the whole idea of the physical branch will be no longer around. It's for those traditional services. It goes back to what we said before. They'll be there for marketing and trust.
Interesting. The largest banks in the world are Amazon and Meta. True or false?
False.
And why?
Why would Amazon and Meta want to be a bank with all the regulatory overhead? There's a great stat from Thomson Reuters that if you're a global institution providing banking, that the regulations change every 18 minutes somewhere in the world.
Okay.
Why the hell would you want that overhead?
Okay. There are still 1 billion unbanked customers in the world. True or false?
True. And the reason because you use the word banked. I think everybody in the world will be able to make payments, and get access to financial services through technology. And even in the remotest parts of the world, you can probably find someone who's got a mobile phone or a computer, so you can make a payment. But a full bank service, I think, will still be out of reach for most.
Okay. AI does a majority of all tasks in a bank. True or false?
True. And that I always remember John Cryan, who was then the CEO of Deutsche Bank, at a conference I spoke at in Frankfurt, saying that the majority of the people that they have in the company are box tickers and button pushers, accountants and administrators, and they can get rid of all of those with AI. And so if you got rid of all of those, what's left, what's needed? You could say relationship managers, but avatars and others could replace most of the relationship. So you end up with the humans are only there really to do everything we said before: train, maintain, and explain the machines and make sure they're behaving properly.
Embedded finance would have taken over from banking.
False.
You don't think?
Well, I don't like the word embedded because I think it's very industry introvert view, rather than looking at the customer and what the customer needs. And so what the customer needs is not embedded banking or finance. What they need is invisible finance that alerts them when they need to know about it, going back to tell me when I need to know something. So it's not so much embedding, it's more around how can we make the customer experience one where it's the best it can be.
The world uses digital credits valid anywhere on the Earth and possibly on Mars.
True, but maybe limited. And that, again, I know you've read a lot of my work, so you'll know I'm a huge fan of sci-fi.
Correct.
And Star Wars versus Star Trek. Star Wars is dystopian, whereas Star Trek is more utopian. And the utopian vision of Gene Roddenberry was that in the future money does not exist. And Jean-Luc Picard has said this quite often, that, well, not quite often, he said it in one particular episode, that the focus is on our reputation, not on wealth. And so in the utopian vision of the future, you wouldn't have credits. Star Wars does have credits. Dystopian, utopian.
Got it. Banking is regulated not by central banks, but by institutions run by independent citizen bodies. True or false?
False.
Central banks exist still?
I think the government, regardless of libertarian views, along with the central banks and regulators, will still be pretty much as it is today. And the main reason being is that for the average person on the street, they don't want radical change. They want a secure life where they can have confidence in the place where they live. And the technologists of this world will all say libertarian views, everything will be decentralized and the network of the people around the world will control everything. I think for the average person, that's not what they want.
The final one, Chris. Financial podcasts like today's Money Majlis are all done by AI bodies talking to each other, two AI bodies, without the need for a Chris Skinner or a Showa Sarkar. True or false?
False. Going back to what we were saying about AI, you need this sort of conversation so that the AI can regurgitate it. So you may have cut and pasted conversations that are thrown out by AI, but you have to have the conversation to begin with.
And just to prove that, Chris, we will do an episode in 2050 where you and I will talk to each other and look back and see what happened in banking.
You'll probably be talking to my avatar because I'll be in space.
Chris, I'll move finally to your work for children, which is very interesting. You started to write books for children, including a book called Fintech for Kids. I don't know if you wrote it for your own children or for the rest of the world, but it will definitely serve as inspiration to the next generation of startup founders. What inspired you to do that? You also do work with a nonprofit, the Portrait Foundation, that engages children in painting. Tell us a bit more about both these teams of work.
So Fintech for Kids is a free PDF you can download from thefinancer.com. I also wrote this 5-book series, Captain Cake and the Candy Crew, which is for 3 to 7-year-olds, all about diversity, friendship, loyalty and inclusion. And the Portrait Foundation was inspired by a friend of mine who's a portrait artist. And she's been running competitions for children based around the idea of you paint your parent or your family. And most of the children choose to paint their mother's face because children are probably more attached to mothers than fathers. And so the idea is to get them to be artistic, grow their creativity. And for me, because I've got 2 8-year-old twin boys, that's inspired a lot of that within me. I mean, it goes back to, use digital for good, make sure you have a purpose, improve the world for our children and our children's children, and inspire them to be creative, because we need to teach children to learn what machines can't do. Why teach the children to learn something a machine could do when what we should be doing is teaching them to be the ultimate human that they can be?
Very, very interesting. Chris Skinner, author, thinker, strategist, and futurist. Thank you so much for your time today with Money Majlis. I mean, your views, Chris, on the future are crystal clear. And thank you for answering all those rapid-fire questions with such clarity. And I'm sure many of our listeners will rush to buy some of your books, and I recommend them highly, especially the latest one, Intelligent Money. Please continue, Chris, to show us the road ahead in your writings. We look forward to seeing you in Dubai for both business and pleasure. And maybe one day you'll move here to live here and contribute to the march of banking in the region here. Thank you once again.
Thank you once again. Really enjoyed it. Great conversation.
Money Majlis is proudly supported by Aqua Now, the premier crypto as a service provider, now building in partnership with the top financial institutions in the Middle East. Discover more at aquanow.com.
Money Majlis is brought to you by E&, a global technology group.
Money Majlis is brought to you by Intellect Design Arena, driving digital transformation in banking and insurance.
Money Majlis is brought to you by Live Digital Bank, powered by Emirates NBD. Trust and innovation combined.
Money Majlis is brought to you by Network International, the leading digital payments technology company in the Middle East and Africa.
So that was Chris Skinner for you in one of the most candid conversations he has ever had. I hope you enjoyed that interaction, and if you did, please share this podcast with your friends, family, and colleagues. As you already know, all profits from this podcast will go into a number of urgent and consequential causes across the world. And you, as the listener, will decide which those are. My guest today, Chris Skinner, decided that he'll redeem his $1,000 Money Majlis gift card for the Orangutan Conservancy. The Orangutan Conservancy is dedicated to the protection of orangutans in their natural habitat through research, capacity building, education, and public awareness programs, and by supporting numerous on-the-ground efforts to save Southeast Asia's only great ape. Thank you, Chris. You too can decide to contribute your gift card to the same cause, the Orangutan Conservancy, or any of the other 5 causes listed on my podcast website. These are Dubai Cares, Red Crescent, Global Fund for Women, World Hunger Kitchen, and the Jaipur Foot. Please visit give.moneymajlis.com to redeem your free $50 Money Majlis gift card to contribute to a good cause. And you get to choose the cause. So please make the effort to visit my website to make a free donation today. Please. Till next time, goodbye and ma salama. Stay well and do good.